of people want to know.
Yes, for sure.
Right? You are married to the price of the house, but you are only dating the interest rates.
What credit score? How do those factors, when it comes to time, play in the mortgage?
At the point of signing with the builder, most times you are able to do that with very specific lenders. Those are recognized income sources for mortgage purposes.
So that's considered high risk.
Yes, right. We've seen a whole lot of people moving to Alberta from Ontario.
Who are the B lenders?
A lot of people take it for granted. Like the only thing they know about their mortgage is the rate. And that is usually so funny.
Hi everyone, and welcome back to my channel. If this is your first time of being here, thank you so much for clicking this video. My name is Lola. I live in Alberta, Canada, where I share about my life here in Canada. I have been in Canada for 6 years, and recently we purchased our first home. Myself, my husband, and my 2 kids who used to live in Toronto moved all the way across country from Toronto to Airdrie, Alberta. I've been sharing all about our first home and the process and how we moved from Toronto to Airdrie. And today I decided to bring someone here with me to talk about, the home buying process. So meet my good friend and my sister, Bimbola.
Hello guys, my name is Bimbola.
Yeah, mortgage guru. Okay, go on, carry on.
My name is Bimbola DC. Well, mortgage guru. Well, on Instagram, I'm called the mortgage chick.
Yeah.
I'm happy to be here.
Thank you for being here. So today is actually minus 38 degrees in Airdrie. Very frigid. It took a lot for her to be here, and I also had to take lunch for me to film this video today. So we've had a long day. So we're warming up with some hot chocolates and some tea.
Yes, yes. It's very cold at the moment, but I guess if you're in Canada, well, welcome to Canada, wherever it is you are. Yeah. It's cold.
Yeah. So following my previous videos about, buying a pre-construction and moving across country, I have some questions on my channel that I think you as a professional will be able to answer.
Right.
That's why you're here today.
Okay.
So I do have some questions.
Sure.
Okay.
Hot seats.
Be ready.
Right.
Okay. So let's try to keep the answers like straight to it. Shoot. First question is what do I need to know as a first-time home buyer? So like, what do I need? How can I get ready? Those 2 questions. Let's take those first.
Right. So as a first-time home buyer, I always say that first you really need to educate yourself. At least understand the home ownership value chain. And what I mean by that is, what are the steps in buying a home? I would say the absolute first step, honestly, is to reach out to a mortgage broker. The mortgage broker is going to tell you how much you can afford. But in coming to that answer, they're going to look at things like your credit score. They're going to look at your income, right? And they're also going to look at the type of property that you are intending to buy. Mm-hmm. So they would also look at something like the debt that you are carrying at that moment.
Yeah. Okay. Yeah. So what documents would they need for these types of checks? So like income.
Okay, right. So yes, the mortgage broker is going to be asking you for a whole slew of documents that may seem somewhat intrusive or extensive sometimes. Mm-hmm. So your income documents, they want to confirm that you are employed. They want to know what type of employment that is. They want to know how much you are making, right? And when it comes to income, it's not just your employment income. They also want to check things like, are you receiving child benefits? Mm-hmm. Are you, well, for couples that, are divorced, is one of them receiving alimony payments? Those are recognized income sources for mortgage purposes, right? Mm-hmm. So your mortgage broker is also going to look at they're going to pull your credits. So your credit report is also a very big part of the decision-making process for the lender. They want to see how responsible you are with money, basically. So those are the main things. They're also going to be looking at, they want evidence of your down payments as well.
Yes.
So if you say, I'm going to be paying 5%, they want to see how you've kind of saved that 5% through time. So the sources of your down payment is something that is very important to the lenders, mainly because a lot of lenders are careful not to facilitate money laundering activities now. So you need to demonstrate how you got your down payments. So that's very important. And I think a lot of people don't realize that sometimes onto the last minute. When they see big hits in your bank statement, so they can see that you've been paid maybe bi-weekly $3,000, and then all of a sudden there's a $15,000 in your account. Be ready to explain where that is coming from, right?
Question is, what do I need to do if my down payment is coming from multiple sources?
Right. So your down payment can actually be a gift. Yeah. Your down payment can actually be a loan, right? And your down payment can also be from your own source. Now, different lenders accept different sources of down payments. For some lenders, they are open to the fact that your down payment is a gift.
Yeah.
Some lenders are open to the fact that you loaned the down payment, but a lot of lenders are not open to it as well, right? So again, I'll refer you back again to your mortgage broker. They are able to tell you what is acceptable for what lender or not. Make sure you are having these conversations very early in the process.
Yeah.
It's very important.
Yeah.
Start that conversation with your mortgage broker, right?
And I think for, like, I want to know what the difference in the process is when you're buying a resale versus buying a pre-construction. You know, because buying a pre-construction, like for us, they had told us possession will most likely be December 2021, and then it ended up moving up until end of May.
Right.
So as opposed to resale, where if you get like your pre-approval, you can actually buy a house within 3 months.
Absolutely.
Within a month to 3 months, right? How do those factors, you know, when it comes to time, play in the mortgage?
All right, so when you're buying a pre-construction, you have to realize that you are buying into something that does not exist yet, right? So time is a big factor. I always say to my clients or anyone that bothers to ask me about this that at the point of signing with the builder, right, you should have at least spoken to a mortgage broker at that time. So they're going to issue you what we call a pre-approval. Yeah, a pre-approval is just what gives the builder comfort that you can afford the house that you are signing to buy in maybe a year down the line or 8 months down the line. This is also a similar process with existing homes. You get a pre-approval, but the only difference really between these two is the time.
Yes, because their pre-approval does not last 1 year.
It doesn't last a year.
Yeah.
Okay, there's a caveat to that. Sometimes some lenders are able to give you a pre-approval that holds the rate for a year. Yes.
Okay.
But most times you are able to do that with very specific lenders, right? The usual maximum number of period you can hold rates is 120 days, right? So, but the builder would take the 120 days pre-approval and they'll just hold it on file till whenever the house is ready, really. It's not like they call you after 120 days that, oh, by the way, your pre-approval has expired, right? They don't do that. But towards the end of the building, like when the building is ready, towards maybe a month or two, you have to go back to your mortgage broker again so that they can actually now finalize it by giving you a mortgage commitment, so that you are ready when the home is ready as well.
Okay, thank you for that. So I have another question here that says, does my credit really matter? But I think you kind of like answered it. But my question now is, what credit score puts me in a good standing for a mortgager?
I would say anything over 650 keeps you in a good standing.
Okay.
Like you've got better chances, but the higher, the better.
Okay, so kind of like, how does a mortgage work? You kind of like already talked about it. So basically, go talk to a mortgage specialist like her, They'll sit you down and put the numbers for you and, put things in perspective.
Yeah, but there's something I wanted to address that from a different viewpoint. So after getting the mortgage, you already have the mortgage. So how does it work?
Right.
Yes.
Oh, yeah. Okay.
Yeah.
Good point.
Yes.
Yeah.
A lot of people take it for granted. Like the only thing they know about their mortgage is the rate. And that is usually so funny.
There are also different types of mortgages
Yes.
as well.
Yes.
Besides the rates.
Absolutely.
Yes.
So get yourself educated. Know whether your mortgage is variable or fixed. And if you're getting on a variable mortgage, there are two types. With the current high interest environments, we got a guest.
Okay.
Are you going to join us?
Yeah, I think I'll just hold him.
Yeah.
Okay.
As a lot of people would have noticed, in this high interest rate environment where people are hitting their trigger rates if they're on variable mortgages, they are forced to know that there are two types of variable mortgages, apart from, there's variable, and there's variable, there's variable fixed, and then there's fixed. Make sure you know these things, know about them. The type of mortgage you are getting, what type of charge does it put against your property? People don't even know, right? I'm not going to go into details, but at least know the type of mortgage you are going into apart from just the mortgage rates.
Yeah.
And also know the differences, what it would mean for you if you decide to pay bi-weekly, accelerated bi-weekly, monthly, or semi-monthly. Because they all these options of paying your mortgage has different implications as well. Make sure you're asking your mortgage broker, right? Then another thing is your mortgage that you pay periodically, like bi-weekly, weekly, right, is made up of the principal pay down and the interests. So really whatever it is you are paying out is split into two, principal and interest payments. At the beginning of your mortgage, like the early days of your mortgage, you are paying down more interest than principal.
Right.
Right.
Why is that?
It's because the lenders want to make sure that they are recovering the cost of the purchase, right?
Yeah.
They're recovering because basically that is how much you are paying for the mortgage, the money they loaned you. So they are recovering that upfront.
Okay. Okay. Now we know what's happening in the industry. People are in hot water because of the crazy interest rates and the high stress tests, and I'm just wondering, what does this mean for buyers in 2023? Is it still a good time to purchase? What does it mean for people who are buying into pre-construction, who don't know what the future holds, especially when the house is going to be ready?
Right.
What does it mean for people who are buying resale, where even though their house may not appreciate as much, but they are still paying high interest rates, What's your take?
So that's a loaded question, right?
Sorry, well, let's take it in bits and pieces.
Yeah, in bits and pieces, and a lot of people want to know.
Yes, for sure.
Right. So let's start with, is it a good time to buy? Now, nobody has a crystal ball into the future, and I'm a very cut the chase down to earth type of mortgage broker. I can go by history and tell you what I think, right? But I do not have the answers to the future. So what I tell people is buy when your own personal economy permits you to buy, i.e. when you can afford it. You cannot time the market. You cannot predict what would happen, but can you afford it? Do you need it? Then go for it.
Good answer. Yeah.
And I always say something. You are married to the price of the house, but you are only dating the interest rates.
Okay.
So you are not stuck with the interest rates. It will change over the course of the mortgage. But the price you buy the house is the price you bought it. So literally for the rest of the life of the house, you are stuck with that price. So be comfortable with how much you are paying.
Yeah.
Okay.
So good answer. I feel like you're pretty much like answered every, like you used one stone to answer all the questions I sort of like had in mind.
Right.
Because I mean, including those who are buying into a pre-construction, because when you're buying a pre-construction, you're paying for the house as of today's market.
Absolutely.
Yeah, so you're not paying the price of the future
The
market.
future.
So either way, you're building equity.
Well,
so,
you're building.
oh my gosh.
You're building or losing equity.
Yeah.
So it can move against you as well. So the value of the house might be lower than what you paid for it in future.
Because of what's going on.
Because of what is going on. So,
but it's not as the houses in Alberta are not depreciating as much as Vancouver and Toronto.
Absolutely.
Because those markets were appreciating above, like abnormally, right?
It was just an abnormal frenzy.
Yes, it was.
In those markets. Yes. And we did not, we didn't go through that here at all.
Because here I see the prices dropping by like 3 to 5%, which is nothing. Yeah. So I feel either way, within the course of a year, your house will still appreciate. Maybe not as much as it will if the market was the way it was last year.
Right, right. And also another thing I would say with the Alberta market, at the beginning of the pandemic, the Alberta was actually recovering from a downturn.
Oh.
Right? So most of the appreciation that was noticed during the pandemic is just restoring them to normal.
And I think that's even due to the influx of out of province buyers like us, right?
Oh my God, yes.
Yeah.
Like us.
Yeah.
Absolutely. So we've seen a whole lot of people moving to Alberta from Ontario.
Yeah.
That's just a thing. Everywhere you go, you can see like people, oh, where are you from? I'm from Ontario.
Yeah,
I'm from Ajax. Yes. I'm from Pickering, Mississauga. So we have a whole lot of people that have moved. In fact, the first quarter of 2021, just the first quarter, like 3 months into 2021, Statistics Canada showed that over 200 people moved provinces.
200,000?
Sorry, 200,000, yes, moved provinces.
Of course, with work from home.
Work from home, remote working.
And you know, at that time too, the interest rates were significantly lower.
And then, of course, again, at that time, lenders were very open to remote working.
Yeah, I mean, I agree. I think, the market became booming here because of people like us. So now my next question is, what does it look like for people who work in other places where they are not able to work remotely? How long, if say they got a job that allows them to work remotely, or even if the job is on site in Calgary, if they are moving this way, how long do they need to have the job for them to be able to be in a good spot with the mortgage?
Okay. So when you're moving across province, the process of pre-approving you for a mortgage can be slightly different. And the single most important factor is your employment status, right? If you can demonstrate to the lender that you are a remote worker and you work from home, honestly, a lot of lenders are very open to that. It doesn't matter. It's going to be the same process of qualifying anybody that wants to buy a house in the province that they are staying. So some of them ask that you shouldn't be on probation and you should have worked maybe for three months minimum, right? So just those normal requirements would obtain.
Yeah.
But for those moving across province, the additional considerations, the best scenario is for you to work remote. If not, then it has to be on a case-by-case basis. Some lenders are open to, some things, while others are not open. So it now depends on, I would say, your mortgage broker's expertise, the relationships he has, and access to different types of lenders that would accept, situations that are not so straightforward. But if it's a case of you can't work remote, it's an owner-occupied property that you are buying in a different province. You can't work remote and you do not have a job in the province that you are going to, then it's a no-no. Most lenders would say no to that.
Yeah.
Right.
So I learned about this person who had great application, pre-approval was set, everything, and then they bought a pre-construction, her and her husband, and just right before they closed, she lost her job. What happens in that type of scenario?
Honestly, I wish I had better news, but lenders also are trying to make sure that they don't put themselves into high-risk situations.
So that's considered high risk.
Yes. If you lost your job, if you lose your job just before closing, most lenders would they're going to pull out of the deal. Right? Yeah. It's an unfortunate place to be.
Okay. So I mean, with the types of lenders that we have, I know I don't really know details, but I know we have like A lenders and B lenders and what private lenders. So how do these lenders, come to play in the whole mortgage, scene?
Right. So the different types of lenders really just reflect their risk appetite.
Nice way to put it. Yeah.
A lenders are the ones with the least
Lowest,
risk,
yeah.
right? They have their guidelines, and you have to fit like a glove into their guidelines.
So A lenders are who? Who are they?
So the 5 major street banks in Canada, like TD, Scotia, they are A lenders. However, there are some monoline lenders. They call them broker channel lenders.
Okay.
You don't, like, the normal, like, Joe Bloggs doesn't see them. They are not high streets, right? They are also A lenders in that.
So there's, aside the big 5, you still have.
Oh yes, you have a whole lot of A lenders. They are called monoline lenders mainly.
Right.
They are broker channel lenders.
Right.
Right. So the B lenders are a little bit more relaxed in their guidelines.
Who are the B lenders?
Well, a lot of A lenders are also B lenders. So the difference is just that their guidelines are more relaxed.
Yeah.
But then that will be reflected in the rates they charge. So higher risk, higher rates.
Okay.
Exactly. Then
the credit unions, how about those? Are they B lenders or?
they can be both.
Okay.
Yes. So like I said, credit unions can straddle both A and B. Right.
Okay.
It's just that part of their business is for A, part of it is for B, reflecting the risk appetite.
Right.
Exactly. Then, of course, at the very end of the spectrum, you have the private lenders. These ones are absolute risk takers. They would accept anything and everything. Well, not quite, but they're very open in their guidelines, but then they are very expensive, right? We all know that. So, yes. So it's always good to make sure that if you want the most favorable terms for your mortgage, right, make sure you fit into the guidelines of the A lender.
A or B.
A or B.
Yeah.
Mainly A. I like to put my clients in the A because B lenders charge a fee. So apart from your interest rate that is slightly higher, they usually charge maybe 1% of the mortgage amount.
Okay. All right. Got it. Thank you so much. I believe I have answered all the questions that I got in the comment section. Okay. And I'm happy to let you go. But if we did not answer all of your questions, please feel free to leave your questions in the comment section. And
absolutely.
Do you think you want to come back?
Yes.
Okay. If we have more questions for you, maybe we'll bring you back.
All right.
For you to answer them. You can also please subscribe to her YouTube channel.
Yes.
You want to talk about that?
Yes. So the mortgagechick.ca or the mortgage chick. I'm new to all this, so I'm getting used to it. On YouTube, I'm on the mortgage chick.
The mortgage chick. I'm going to link it. So I'm going to be linking her YouTube channel in the description and also on the title so that you can go check out her channel, subscribe, and listen to everything that she has to say about you getting a mortgage for your home. I I hope you found this video helpful today. I hope you enjoyed watching. Please feel free to give this video a thumbs up if you enjoyed it. Share this video with anyone you think will find it helpful. And yeah, I'll see you in another video. Until then, it's bye from us.
Thank you. Bye.
Bye.